Hello, this is Derek Izuel, Chief Investment Officer with Shelton Capital Management with the Shelton CIO Minute. After a summer break, CIO Minute is resuming commentary with the most central of topics, the Fed. Markets have been buzzing about the Fed's recent rate cut, but the real story isn't the move itself. It's what markets are telling us about the effects of Fed policy. For the past few years, cyclical sectors like energy, financials, and consumer discretionary have outperformed in equity markets, while defensives such as utilities and staples have lagged, which is what you'd expect when investors see growth holding up and policy easing ahead. But here's the key. Sector leadership isn't about the Fed's actual rate cut, it's about the expectations of rate cuts. And our best indicator for Fed policy expectations going forward is the yield on the 2-year Treasury bond. When the 2-year starts falling, it signals that markets expect more easing and that cyclicals are going to get bid. But if the 2-year stops falling or reverses, defensives will regain their footing. And that's what we've seen. In this chart, you can see that the 2-year yield in black peaked in 2023 when the market perceived that the Fed had gotten the best of post-COVID inflation under control, and that yield has continued to fall since then. It's now at the lowest yield since the Fed stopped hiking rates. I'll compare this to the red line, which shows the relative performance of cyclical versus defensive stocks, with the cyclicals on a 2-year run outperforming defensives by nearly 30%. So the takeaway is simple. Don't just watch what the Fed does or what the Fed says. Watch the 2-year Treasury yield. It's the cleanest window into the market expectations and the sector leadership story. If yields keep grinding lower, cyclicals can keep leading. But if the 2-year stabilizes, expect a rotation back toward defensives. What to watch next? Well, keep an eye on inflation and labor data because they'll move the 2-year and tell us whether cyclicals stay in charge. And in the future, we'll review the relative valuation of cyclical and defensive stocks and see if this trend has much farther to run. For more information, don't hesitate to contact your local Shelton Capital representative. This has been a Shelton Capital CIO Minute.